Welcome to Mini-Set number 1, video number 3, where we're going to pick up on May 9th, the transaction. So the very first thing we're going to do is we're going to put the 9th in there on the day. So that's when the transaction happened. What happened on that particular day? Well, we got received money. So anytime you receive money, what do you do with it? You put it in the bank. So there's your cash in bank. We provided the services to James Market, and it was web service fees. So we know we have web service fees. That's a revenue account. And that's what happens. We had, where did we get the information from? The receipt number 101. We provided the service. They paid us for the service. We gave them a receipt. All in like one transaction. Cash at bank is an asset. Assets are increasing because we put money in the bank, and there's going to be our debit. Web services is a temporary capital account, and that is going to be increasing, and there is going to be your credit. So in case you're wondering, this is what the capital account looks like, right? It lives in, and then inside there, you have these temporary accounts, and one is going to be fees or revenue. And because it lives in the right side of it, right, it's going to be increasing on the right, which is a credit. The expenses and withdrawals live in the left side. So therefore, the left side of these accounts are going to be the increased side. So keep that in mind. There is going to be your debits when you see them pop up. Let's get rid of this. All right, time to journalize. Cash in bank is going to be our debit. How much was it for? Well, it was for $1,000. $1,000 debit. It increased. The second account affected is going to be web service fees. How much was it for? $1,000 credit because it's increasing. The source document cited is receipt 101. That's pretty clean. So let's go back. Now, next transaction is going to be the 11th. Let's put the day in right away. Let's take a look what happened here. Completed website design. So there's going to be a web service fees. We earned the money for it. Now the question is, did we get it, or are we going to get paid later for it? Completed website design services for Andrew Hospital to be paid later. We provided them an invoice number 101 for $3,000. So we know if we expect to receive the money later, that's going to be accounts receivable. And more specifically, it's going to be for Andrew Hospital. Accounts receivable is an asset. That's a good thing to have. It is increasing. There is going to be our debit. Web service fees, just like this web service up here, is a revenue, is a temporary capital account. It is increasing because we just earned money and recognize it using the revenue recognition rule. You recognize it when it's earned, not necessarily paid. In this case, we were not paid for it. And that is going to be our credit. So turning over to our journal, the first one's going to be accounts receivable. There's our debit, Andrew Hospital. And that was for how much money? That was for $3,000. And then we have web service fees, $3,000 credit. That's increasing. And the source document cited in this case is invoice number 101. So you can go invoice number 101. That settles that one, doesn't it now? All right, so now we're on to the 12th. The date is the 12th. Let's take a second, put the date in. There's the 12th. And what happened on that particular day? Bought software. Okay, so we know that that's going to be in this web server account. Okay, that's a web server. It points it out right here. On account, we bought it. So we expect to pay it later. If you expect to pay something later, you know that's going to be an accounts payable. Who was it that we bought the stuff off of? Web service from Service Plus Software. And more specifically, the accounts payable is going to be Service Plus Software. Okay, we have an asset account because the web service software goes into the web server account. And that is, so if you buy a computer, you pay $100 for the hardware, you pay another $50 for the software. That's what happened here, but on a larger scale. So the web server account is affected. It tells you that, so you should have no problem at all figuring out what chart of accounts to use. Okay, we have more server software. It's an asset. And there's our debit. We have more debt. There's your liability. And there's your credit. So let's turn to it. Web server. And that was how much? $10,000. That might seem like a lot of money to you for software, but if it helps the productivity of everything, it is not a lot. Next account is affected was the accounts payable. Who was it for? Service plus software. How much was it for? We're increasing that accounts payable by credit, $10,000. Okay. What was the document, the source document that we came across? Well, we provided them, or excuse me, they provided us invoice 876. In this case, we're buying. Okay, that solves that problem now. Moving on to the 14th. What happened on the 14th? We wrote a check. Well, right away, you know where money comes from, the cash in bank. We wrote a check number 102 for $118 for the electric bill. What is an electric bill? We're often asked that in class, and I will tell you the electric bill, though it doesn't tell you here, it would be nice if they did because I don't expect kids to be paying utility bills. That is considered a utility expense. Gas, electricity, water, sewer, those types of things are considered utility bills. So you would go utility expense. Okay. Utility expense is a temporary capital account. Again, it lives in the left hemisphere. The left hemisphere. We have more expenses, and that is going to be our debit. Cash in bank, well, we paid a bill. Anytime you're paying a bill on an asset, it's going down. And there is going to be your credit. Debits first. Date of the transaction, 14th. Utility expense. How much was it for? $118 debit. Credit. The credit is going to be cash in bank because we spent money. It's going to be decreasing. It decreases by credit. What's the source document? I'm going to tell you there's probably a check number 102. Check number 102. If you have any doubt about that, just look and see where the last check is. Well, here's the last check up on the second was 101. Next transaction took place on the 15th. So we will say, let's put the 15 in first, get that started. And we'll take a quick look at the transaction. Hines withdrew $2,500 for personal expenses. He could have used it for anything that he wanted. He could have run down to Parks Casino and put it on red and lost it all, or maybe made a few bucks on it. But in any case, he took value out of the business by writing himself a personal check. Fair enough. So if you take money out of a bank, out of the business, and you wrote a check, it has to come from somewhere, right? So you have cash in bank. It's decreasing because you wrote money, and you know that that's going to be decreasing by credit. What happens when the owner takes money out? Well, the transaction says withdrew. You go to the withdrawal account right here. It's under the owner's equity. It's the most effective way of devaluing your company is by just taking money out of it. You lose value right away. Or let's say the business loses value. You might gain some personally. But in any case, it's a withdrawal account. So we're going to say withdrawal. Withdrawals are a temporary capital account. And it lives in the left hemisphere, right? So we know the withdrawals are increasing because he took more money. And if it lives in the left, the side of the T account, there is going to be your debit. It's on the same side as the utility account. So what do we have? We have withdrawals. How much was it for? $2,500. Capital or cash in bank is decreasing, $2,500. And the source document for that, well, I guarantee it's going to be another check, right? Check number 103. Check number 103. We might have space for one more transaction. So we will take the 17th, and we're going to run with that one. The 17th, what happened on the 17th? Well, let's first put the date in. And let's analyze it. Completed web service designs on account. So we provided services on account. In other words, we expect to receive the money later. So if we expect to receive the money later, we know that that's going to be an accounts receivable. Who was it for? Accounts receivable was for Sunshine Products. Okay. We earn the money. We didn't necessarily receive the money, but the day we earn the money, we need to recognize the money. So we know that that is going to turn out to be our web service fees. That's our revenue account. Refresh your memory on that. So accounts receivable is an asset. Assets are increasing because we expect to receive more of that money in the future, and there is going to be your debit. Revenue accounts live on the right side of the capital account, and it's a temporary capital. And it's increasing because we have more revenue. And if it's on the right-hand side, there's your clue, credit. Debits first. Accounts receivable, Sunshine, Sunshine Products. How much was it for? Let's take a quick peek at that. $5,000. $5,000. Okay, second part of that is going to be web service fees. How much was it for? Credit $5,000. And the source document quoted in this one is invoice 102. All right. Well, just for the sake of moving things along here, perhaps we should do the 18th. That'll wrap up page number 1 in our general journal. It does take us into, let's see here, we're already at 13 minutes, 13 and a half minutes, but I'd like to get this journal page finished. So I'm going to allow me to just erase some of the work up here so we can do that at 18th in a nice clear working space. Come on. All right, what happened on the 18th? First of all, let's put the date in there, okay? So the date is the 18th. What happened then? Bought a filing cabinet. Identified the account as office furniture. What did we do? We bought it with cash. We wrote a check. Where does it come from? Cash in bank, because we wrote a check number 104, right? So then we have more office furniture. That's an asset. Assets increase by debit. Cash in bank is an asset. Well, we have less of it because we bought something with it, and there's going to be your credit. Debits first. Office furniture. And how much was it for? Office furniture, $275. Whoop, what am I doing? Cash in bank, $275. Source document, well, we paid with a check, so it's going to be check number 104. Check number 104. If you have any doubt about that, just look at the last check we wrote, which was check number 103. That concludes this journal page. We'll be going into journal page number 2 in the next video, so I will see you there.